This fall, the brightest minds in finance will flock to Florida for a weekend that will change your life, with insights from the brightest stars in the financial universe and an event that will bring them all together. Presenting the first annual T3 Live Finance Festival at the Mayfair Hotel and Spa in Coconut Grove, Florida, for a weekend you'll never forget and memories that will last a lifetime. The Finance Festival, a Todd Harrison production, brought to you by T3 Live and TradeStation. A portion of the proceeds to benefit the Ruby Peck Foundation for Children's Education and the Crohn's and Colitis Foundation of America. Friday, November 6th, Sunday, November 8th, 2015. Bring your spouse, tell your friends, make some noise, and take charge of your financial future. It's gonna be nuts. Space is limited, so act fast. Early bird discount registration ends August 31st, 2015.
Good morning. My name is Scott Rutledge, Chief Strategic Officer at T3Live.com. It is Monday. Welcome to the morning call, and we have a new week. So we wake up this morning and pretty subdued markets around the world. I don't think anything's crashing or falling apart like last weekend. But things are a little bit softer, which makes a little bit of sense. Asia late last week, the Shanghai had about a 9% bounce off the lows, and it's down a little less than 1%. If we take a quick look at the FXI, which is something that we do look at just to see, the type of action we can expect. We've talked about, the volatility here ever since it broke, this major support and went below the 8 and 21-day moving average. You had your low last weekend. It's pretty much worked its way, I would say, all the way back to, somewhat, bigger resistance. So the question is, does it, fall apart right here, or does it make some type of higher low to then continue back to retrace up? And there's a huge amount of resistance up there. I'm not expecting huge things, but it's worth noting that you did get a snapback. And now the question is, where does it hold? That goes the same for Europe. I think the DAX had about a 10% move off the lows. We tried to, calculate that, and people did put some risk on there. But then I think into the end of last week, you take some off, right? You had huge oversold markets around the world, so it made sense to buy some things in the hole. And now they have to prove if they could hold up. So one thing we've been watching for Europe is the HEDJ, okay? And basically, this trend, and we like to follow trends and be in them when they're above the 8 and the 21-day moving average, changed after the first quarter. First break was right here. Your little confirmation was this lower high. Then you had this head and shoulders, format where you had left shoulder, head, right shoulder, etc. And then let's just fast forward to where we are now. Okay, broke below all moving averages. This was that last gap that we talked about that kind of changed the complexion there from, being a committed rally versus not, and then boom. So with that being said, from here to there, major resistance comes back in where that that support was, that turns into resistance. So the question is, how does it digest? Does it hold above here and create a new flag, or does it retrace a little bit further? And I would say, most, bulls here would like to see, that, somewhere, about the 56 level, or somewhere, would be impressive is if it could hold around this 57. So, with that said, our markets kind of look very similar, right? We had the breakdown 2 weeks ago when the S&P broke that range, broke below 2,040. That's when, guys got out of the way. That's when shorts pressed, and they did it into the weekend. And then last Monday was a huge down move to 1830. So from the Thursday of 2040 to 1830, almost 200 handles. It was definitely, it was hard to do, but it was very profitable to be buying in the hole on Monday, Tuesday, and then by the end of the week, we had a rally back up to about 1990. So with the futures off 16, 17 handles today, the question is, how much do we retrace, of last week's move, and where can we potentially buy the dip or not? So I think what I did with my morning note that I sent out to all of my Red All Access subscribers is I put down higher level support, and then, lower, more like top third or half of what we can see to map out to figure out whether or not we have a day like last Friday. Remember last Friday? We came in, futures were down 18 handles, and then it went green and it held up. So if you look here at the SPX, it's very important to watch this. First of all, here was your channel that broke. And we went over this so many different times, and everyone had the same chart in front of them, very prepared for when this resolved to the downside. So here was, your 1830, went a little bit below that, your snapback. Okay, so right here, that's your new resistance. And right here is Friday's support. Okay, so write down this spot, 1975. Can 1975 hold? Which would be very, very impressive, and I'm not sure if it does. That's where we are right now. So, I think watching the open around that spot, and then maybe we put a 15-minute low around that spot, that would be an area to look at. Or can they probe a little bit lower and not make it that easy? So if you look back at the chart of the SPX, you will see, if you kind of make this a little bit bigger here. All right, let's go out. By the way, this is a new e-signal that I'm using, so you got to bear with me. I am a creature of habit. I don't like using so many new things. But basically, this would be, if it tries to go a little bit further, this would be your 1945 area. So if the bulls want to get a reflex move up, potentially a little bit of a pullback, hold above 50% of that range, this would be a great spot to hold. If this spot holds this week, okay, if we even see it, this would be a spot to look at to figure out if you could buy this dip for potentially maybe a move back up. So right here you have support 1 and then support 2. This would be your major pivot for the week, 1945 to 1955. If we get a close below that, then everyone's going to be talking about a retest of the 1830. You go to the weekly chart and you'll see that at this point what all we're looking to do here is, sometimes is retest a broken channel. So if you go from here all the way back up, this would be your 2020. So from right here, we held that October low and closed there. So now the question is, does it try and retrace a little bit higher or not? So we'll get some clues from that, based on this weekly's action, because we're not oversold anymore. So you don't have that working for you. So there has to be actually some real buyers in this spot. Some clues that we can get are from some sectors. Last week, the Qs led us off the lows. So you want to see how does the Qs hold up. You had a big break in the weekly chart, which we've went over many times. You could draw your trusty line like I do here. So the question is, does it come back up and want to retest this spot, which it basically almost did. So if you sold when this whole big level broke and the trend broke, you had a lot of opportunities into support, and that opportunities was last week. So we'll see what kind of opportunities we have this week. So you go to your daily chart of the Qs, and you make it a little bit so you could actually see it. All right, so you go like this. So the question is, does last week's low hold, or Friday's low? Not even last week, I'm sorry. So that would be right here, okay? That low to write down is 104.85. 104.85 would be a very high level flag. That means buyers are really stepping in there quickly, even after the size of the move that we saw. So I would be a little careful buying right there, just in case. A little bit of a bigger support would come into right around here. Now I would rather see move down to this 103 area. I don't know if it happens today, if it happens tomorrow, but this would be a spot, if it did happen today, I think you want to examine to see if you could buy that dip. If you get a move and close below this, then all of a sudden you see some pent up momentum here leave, and then we get more into that range bound trade. So that's like my thoughts almost on everything. How do we hold up? Do we hold the top third or half of everything from last week? That can give us some clues of higher prices. Do we hold actually Friday's lows, which would definitely make some shorts a little upset? And then how fast do we have to move? What type of speed? Just real quickly, I'll just show you the bios. The IBB, it broke this little key area. Okay, I drew that the other day when it broke it. So the question is, do you get a retest of this 357 to 360, which it's almost there. So with that being said, with the futures lower, here is, I would say this is actually bigger support, 342. And then you have this support right around, the 350. So same thing, you could do this on all of them. You had a huge travel range. You have Friday's low of 347. If that were to hold, very impressive by the bulls. And then this would be the area that, you would think that if, buyers want to keep momentum here, this is what they hold. And if it doesn't hold this, then volatility picks back up and we get a lot more two-way action, which is good. Two-way action, I think a lot of traders, I was out this weekend, everyone's talking about their week and how crazy the moves were and how, finally the range broke and we had some volume come back to the market and you had some, headlines back creating interest, which is great. That's what we want. that range that we saw the first 7 months with a bunch of computers trading with each other was not the most conducive trading environment, at least especially not for me. So anyway, so the stocks that we talked about going to, the go-to names that all broke down 2 weeks ago that we were all out of pretty much, gave a lot of opportunity last week. So the question is, those big travel ranges, how do they hold up? So this is like the whole theme of my day today is, what holds up or how do they hold up? You look at this move in Apple. Apple had a really nice move from 92, okay, came in here, held, gave you another push up, and the question is, does it hold this upper level now? So, right down 109, what is this, 109.50. If this could hold like 109.50, 110, perhaps, there's another little pattern in here where it wants to continue to show some leadership and press higher and retest the 200-day, which is at 118. This was the first stock to go green on Monday, which was nice to see, which is something that I was pretty focused on. And now the question is, does it stay tight and continue? So you do have Friday's low, which stayed in the same consistency, 111.54, and then you have 110 in change, and then this is really bigger down here. If Apple were to break this 110, chances are we probably retrace a little bit lower in the Qs, etc. It's not, just to show you one more time, it's not that, so like everyone pretty much was out of the way when this whole range broke here. So the question is, does it come back up and try and retest this area and show some leadership? You have a big event on September 9th. At this point, at least holding up and holding higher would be around 110, but you can rule out a little bit lower because of the size of the range. So that's the problem today. I already had like 2 traders come in. They're like, oh, today's going to be hard because if you buy too quickly at the size of the range, we can get run over, and then there could be a support that we would have liked to have bounced, but we would have been in too early, so we have to wait. But if we wait and they go green and they go today, you're not in it. So I would say, test a few things, keep your size down, and we'll be on our toes, and you'll see what we put on with the VTF. Another stock that definitely go to status is your Netflix. Netflix, if you remember right here, okay, got a little wishy-washy, and if you sold your Netflix when this upper flag broke, okay, you then had a really nice opportunity to trade it in last week's volatility, which happened to be somewhat lower, a lot lower. So, so you look at the size of this move. So same mantra, I don't want to sound like a broken record, but this is what you have to think about. Will Netflix hold higher? Will it hold Friday's low, which it's already below, of 115.88, which is good, it's below that, or 113? So if it were to hold 113 and go sideways, perhaps it creates a high level pattern here to build, to work off of. If it doesn't hold this and fills the gap, it's still not the end of the world, except for if you buy it too early. And then that's spot number 2. So here's a pretty big spot right here, right around 113. See if this gap holds, and then because, it did hit, what did it hit last week? 119. So 113, $6 lower could be a good spot. And this will also give you clues on what type of retracement we have. Do we hold higher and you have to be on your toes and buy them and shorts are squeezed, or does it break this and you have to be a bit more patient? Again, nobody truly knows until we see the market rally unfold. And then how do you see that? If the futures that are down 15 handles and goes almost green, and Netflix is still down and doesn't go green, or Apple's still red, and then I'll get into Google is still red, then that maybe we go a little bit lower. If all of a sudden they push the futures down another 10 handles and you see all the go-to names start going green, you'll know we'll probably hold up and these things will continue to be leading the way. So we just spoke about Google. Let's take a look at Google. Google had the first move, okay, off of actually it held the 200-day, which a lot of things didn't do, and came back right into resistance. We went over this resistance on Thursday. So if you were in it and sold resistance, congratulations. You had a great trade. Some people might have even shorted it there. So now the question is, does it hold just say 640? So from here, boom, does it hold up here and continue higher? Okay, this is one of the leaders out there, so it's good to know what it's doing. It actually came in a little bit on Friday, and now it's down $5. So some people might be trading this for a red to green trade. Here's your 640 area, and just realize the size of the move. This would be even a little bit higher, I think, which it's above. So you want to do high level support. You have 651. A little bit below it is at 640. So that's Google. Amazon also. Amazon had a big move, very tight here. Does it stay tight? Okay, which would be very impressive, which probably keeps a lot of shorts, on the run. Or does it pull in a little bit? So here we go again. Back to my little pencil. This is your new descending channel. Here is upper level support. So If it were to stay above this 500 and build, maybe there's another pattern here that it could show leadership if it breaks above. Micro is Friday's low of 513, a little bit bigger is 507-ish, but you can rule out from 450 up here. Maybe it goes even a little bit further down. So, I would just be a little loose today. Be on your toes, take some trades because, again, maybe people are worried that we're going to have the same type of trade as last Monday because we started low and got crushed, but I think that dynamic obviously changed. But do we hold 1975 or do we see 1945 to 1955 in the next session or so? So I'm just trying to pound that in because at this point that's pretty much the strategy. You look at other names. Facebook was a great go-to name. 1 billion people I think were logged in. That was the headline on Friday. This was one of the vehicles I chose also last week. So the question is, from 72 to as high as 91.48, what type of retracement do you have? Pulling back to here, which would be about 87.50, I think would be great. But for that to happen, it's got to get through this first. So support 1, support 2, and no real pattern here. It just has to see how these things snap back, go sideways in here, and then potentially break descending channels. So at this point, you have all these go-to names that have been basically broken that gave you clues to get out of the way over a week ago, and then last week you had your in-the-hole type trade. Now we have to figure out what kind of pattern builds, and can you trade it, and how high does it actually hold, to keep you involved. Last week, what helped the rally also was the first big potent bounce in oil and oil names. So if you played the bounce and sold Friday, great. Because these things have happened like this many times. But this one had a little bit more volume, a little bit more potency. So we'll look at some of the leaders to figure out, if it can continue. So you look at something like XOM. All right, all XOM did is bounce back up to broken support, which then turns into resistance. So now, how does it hold? If XOM were to hold above, just say 72 for a little while, maybe it'll give you some clues that some of the bigger trends could change, because this one has been trapped. You want to talk about trapped, this thing has been absolutely annihilated. So here is your first big wide range bar, and now you want to measure commitment to it. So how do you measure commitment to figure out if there's more? If you missed the first part of it, you want to hold the top third. So if this were to hold 72, I would think that it's in the game to perhaps even give you a better bounce up towards the 80 area. But we've seen this somewhat before, but this time maybe it's different. So you have some room here, but again, you want to measure the commitment to it. Oil, everyone started calling for 20 bucks, and the consensus is usually wrong, and the USO had its first potent move in a while. This is an outside week. When it breaks below a low and then breaks above that high, boom. What this does is it traps some shorts, it capitulates some longs, and now you want to see what's next. So I would say in order for this to be any good, you probably want to see it hold just say 1380. And then there is bigger resistance up here, which comes a little bit closer to this 116. So this is a pretty potent day. You haven't seen a day like this in a while. Okay, so that hopefully had you at least cover some shorts and maybe think about playing a counter trend move. But counter trend moves are tricky because that's what it's called until you get a new trend, right? It's been in a downtrend, so you got a counter trend move with some volume, with some authority. So now you figure out, does it create some commitment or a higher low to it and then start a new trend where you could stick with it, or was it just a trade? So Jackson Hole was over the weekend. I think Fisher said they still want to do liftoff this year, and I still think that's a good thing. The volatility picked up when the Fed was dovish in the minutes. So at this point, I think there's 38% chance saying that they're going to lift off in September. I'm not sure if that's going to be the case, but we shall see. I guess they don't say the Fed watches the markets, but if all of a sudden we hang in there and we work our way back above 2,000 in the SPX or 2020, I think we have a better chance of liftoff in September versus if all of a sudden we break below 1925 to 1950 and the volatility spikes. They'll probably get a little scared. But I think the market wants it. I think people want to see that, yes, we're kind of normalized. Our economy is that good that we can go a quarter basis point. That would be helpful. It might give a quick little shock, but then the institutional players I speak to, that's what they'd rather have. And if it's not September, maybe it's October, maybe it's December. We have the jobs on Friday. We have a lot of trading in front of us. At this point, if you are a macro player, keep putting your monthly funds in. This too shall pass. you know, if you're my age, which, you know, I look, you know, a little bit older for my age probably, but anyway, if you're in your 30s, 40s, 50s, and you plan to be in the market for 10, 15 years, this could, you know, help your average cost. If you happen to be in your 70s and 80s and you were jumping out of your skin saying, oh my goodness, I'm not going to be able to pay my bills the next month, I have too much in the market, you know what, reduce it because you don't have the same time span. If you're an active intermediate trend trader for alpha like ourselves, last week was a great week, you know, for a lot of us, and now we're going to figure out how do we hold in there using, you know, high-level support and then some other pivots, you know, to measure whether or not we could put back on some longs, or do we stay tactical and look for sell setups and then, you know, buying in the hole for scalps. And you know, I think there will be more people around this week. I know my son starts school on Wednesday, so most guys who took vacation did last week because Labor Day is later. So you know, there'll be some more people around, so it'll be interesting to see how it all plays out. So tune into the virtual trading floor. I'll see you at the recap. Have a great day trading.